Welcome back, everybody. So you saw last week's video where we were asking Kelly all kinds of questions about business bankruptcies. But what I didn't know was going to happen until a little bit earlier today was that she has a whole list of her own to ask me in terms of the things that I advise my clients on as a CPA. So she's flipping it around and she's going to interview me for my YouTube channel. So this will be fun. Thanks, Kelly.
Absolutely, no problem. So a lot of times I have clients who come in who have a number of questions about accounting.
Okay.
And so this is going to be a hodgepodge.
As they should.
Hodgepodge of questions in no particular order, just how they came to me based on my clients asking me. First, if somebody comes to see you and they say, I want to form a new company, and I have no idea whether it should be a limited liability company or a corporation, I just know I want to form a company in Virginia. How do you determine which form of entity to choose?
Well, it's a great question, and there is not one right answer. I don't generally recommend that you go straight to an S Corp or a C Corp. But we're looking at cost. They've got a lot of compliance. They're expensive to form. They're expensive to maintain. I generally go for the LLC because my demographic is very small businesses and they don't need to leap into big business accounting or financial reports or any of those kinds of things. So we generally start off as an LLC with a single member or multi-member LLC that is taxed like a sole proprietor or a partnership, right? We're subject to self-employment taxes, all those wonderful things. And I'm very, very, very careful. It's a very flexible form of business structure, which I love. And we don't necessarily pull the S election trigger too fast either because we have an issue with equity then. If you don't have enough equity in your business and you're pulling money out, your business can make a loss, but you're still paying capital gains tax on return on investment called what you thought were tax-free dividends or owner's draws. So I'm looking at a lot of things like what are their projections? Where are their numbers right now? Does it make sense? Most of the time, it does not make sense to be a full-on S corporation or C corporation. I always recommend the LLC because that gives us flexibility to make decisions the more and more we get to understand their business and how their operations are going to flow.
Okay, so once they've decided, whichever it's going to be, more than likely, based on what you said, a limited liability company, and they decide to form it and they do, is there any type of financial software that you recommend that they purchase in order to keep their books and records?
No, I actually recommend that they hire me and let us handle the financial software. If you are a small business owner, you need a CPA. Bottom line, you guys get yourselves into trouble. Now, we use QuickBooks Online. We almost exclusively use QuickBooks Online. There are other accounting softwares out there. You've got Xero, you've got Sage. QuickBooks Online is the most prevalent, easy to get your hands on. Everybody's very familiar with it. So right now it is one of the best products on the market for small business accounting, but I have kind of a love-hate relationship with it because it makes my business owners feel like they're accountants when you really still need to be an accountant to understand how everything fits together within QuickBooks Online. So that's like my first thing is like, yes, QuickBooks Online, but get it through me.
Right. Okay. What type of accounting would you recommend, or does it depend on the business? Meaning, do you recommend the cash-based accounting, accrual-based accounting, and what would you consider when determining that when somebody is forming a company?
Well, first of all, the only company that is required to use accrual are C corporations that make more than $5 million a year.
Okay.
And most of the time, cash and accrual, I do both for my clients. It's possible to do both.
Okay.
Most of the time, they're cash basis for tax purposes, but we use accrual basis in order to determine how healthy their company is in terms of growth. All right. And just to explain the difference between the two, accrual basis is a technique where you are taking maybe invoices that you've sent to clients that you haven't necessarily been paid for yet, or expenses that you've incurred, but you haven't necessarily paid yet. And we take all that into an account. With cash basis, it's really all about what's coming and going from your credit cards and bank accounts, what has been reconciled and cleared that bank. That's generally what we do for tax basis. I haven't really run into a situation yet where with an S corporation, which can make the accrual, they can make that accrual technique selection as well. I haven't seen a situation where that's been better or worse than anything else. It's 6 of one, half dozen of another. But once you make the choice, you don't get to flip back and forth depending on what best suits you. It's one or the other.
Okay.
And
that's
then if
important.
you do decide to change, you have to justify why you made that change.
Really?
Yes.
Okay. So once you make it with all of the knowledge that you can get from you, but then once you do it, understand you can't next year go, you know what, I'd prefer to do it a different way.
Right.
Okay. So let's say we formed our company, you're the accountant, and now they've decided they want to get a loan and they don't know how to do a financial statement. Would you be able to help them prepare a financial statement?
Well, our firm, we have to be a little bit careful about that here because you have this thing called audit and reviews where you have a CPA sign off on a financial statement that gets sent to a bank. And essentially we're vouching as a third party for the accuracy of the financial reports. And we actually don't do that out of our firm.
Okay.
There are CPAs who do that. It requires a level of independence from the clients that I personally don't want. I like being in the weeds with our clients. However, we do provide them every month profit and loss reports, or every quarter if you're a quarterly client. You get profit and loss reports, you get balance sheets, you get what's called an Ask Client report, a members draw report, you get all of those things. Now, what you do with those statements are totally up to you, but we're typically not the ones who are signing off and sending it to the bank. However, if you need that, I have relationships with other CPAs who absolutely do that, and we usually have to hook that up. But that is an additional cost. So if we can avoid it, we try to avoid it.
Okay.
Because it can be very expensive, from $2,500 to $5,000 to have somebody do that.
But you would do as you said, the monthly P&Ls, a balance sheet, just general financial statements to let the company know where it stands.
Correct.
What you're saying is for the banks, that's a heightened level. And because of that, that's going to cost a lot more money and has to be under, I guess, the general accounting principles.
Well, it does have to be under general accounting principles, generally accepted accounting principles. There we go. That's a great, we'll throw that one out there. But more specifically, if I'm doing that, if I'm signing off on these documents and sending them to the bank, it decreases my capacity to be working with my clients, because doing something like that takes a lot of time that I just don't want to take away from my clients. On top of that, it opens my firm up to something called peer review, where outsiders come into our firm and tell us what we're doing right and what we're doing wrong. And there's absolutely nothing wrong with that, but it's actually an additional cost for me. I just don't want to pay. And on top of that, I don't like doing auditing. That's just not my thing. So again, I just make sure to form those relationships with accountants who do like doing those things.
Now let's take the new business, and we have a business owner and they say, oh, I put $40,000 into the business. And that's how they say it. I put in. What would you consider to determine whether that means it's a loan or it's just a contribution?
Almost always we classify it as a contribution, because for tax purposes, that's just easier. A lot of cases, small business owners need that bump in equity in order to make sure they don't have to pay capital gains tax. So we like the contributions. And just so you know, equity is an amalgam of a lot of different factors. It's your equity goes up with profit, it goes down with losses, it goes up when you take money out of your pocket and put it into the business, called a contribution, and it goes down when you take a distribution, it goes down, or it goes up for debt that is at risk, meaning you are personally responsible for that debt. It'll go up for that. There are a lot of things that make it go up and down. Now, when it comes to the loan itself, there are rules. And one of the rules is it has to accrue interest. There has to be documentation between the individual and the company that this is a loan. The individual has to recognize that interest as income when it comes tax time. Also, they have to be careful about how much interest they're charging, because, interest is taxed a little bit differently sometimes. So, there's a lot of, I tend to just avoid the whole shareholder loan thing altogether, and we just call it a contribution.
Okay. Now we've set up our company. You've advised them on how to set it up. You've walked them through it. And now they're deciding how to make their payroll. Should they be doing that themselves? Should they be talking to you? Should they be talking to a third party?
Let me tell you, this is like the best question out of this list, because hands down, you should be using a payroll provider. Now, there are a lot of CPAs out there and accounting firms that will do payroll for you. To me, that's kind of like sending a general practitioner off to do heart surgery, right? We generally don't specialize. I recommend that you get a payroll company that lives, breathes, bleeds payroll. Payroll is the number one way in which my small business clients get themselves into trouble. So having a payroll company is a protection for you because they know what they're doing and you don't. Believe me, you don't.
Okay. What happens if for some reason the small business doesn't set it up right or they don't pay the payroll taxes?
Well, again, we're going to go back to a conversation that we had, I think, in the last video, or is it this video? I don't remember now. But essentially, it was the last video because we were talking about discharging tax debt. Well, tax debt does not get discharged. The officers or owners of the company are responsible for payroll taxes, keeping in mind that payroll taxes is mostly your employees' money. So if you take that and you use it for something else and don't pay it to the IRS or the state like you're supposed to, it's really theft. You've just stolen your employees' money to pay for something for the business, which is wrong. They don't like you doing that. So what happens is they'll try to collect, and if they can't collect it after a period of time, you will get assessed personally for something called civil penalties, which is basically the amount of money that you took out of your employees' paychecks that you did not pay forward to the state or the IRS. And now you personally have some issues. So that's another reason not to handle your own payroll.
Well, that's a very good reason not to handle your own payroll. Totally unrelated, but I see this a lot of time on financials. What exactly is Goodwill? When you're talking about a small business, what is it?
Well, Goodwill, first of all, is not something that happens a lot when you have a small business. Like most of my demographic doesn't understand Goodwill, but a Goodwill is essentially your business is been evaluated and the market value of your business is $100,000. And this is a very simplified explanation. But you sold it for $150,000. Well, they basically just bought $50,000 of Goodwill. That's what Goodwill is. It's the amount of money that you spend on a company above the market value of the company.
Kind of like an investment. You think that the company's going places where it hasn't yet gone, and
Right.
So you're speculating that there would be competing parties who would maybe want to buy the company.
Right. And Goodwill does get amortized over time, like depreciation on an asset. It's considered an asset. It does get depreciated.
Okay.
Yeah.
Do you assist, talking about selling businesses, do you assist at all in valuing a small business? Like a client of yours decides they're going to sell their business. Would you assist them in calculating the value of the company?
Sure, the book value. But there are a lot of different ways to value a company, and we aren't qualified in our firm to do that. It's something we generally recommend you go to a business broker that has a lot more experience doing that, and they're going to be able to take things like intangibles into account, brand, goodwill, all of those wonderful things. For us, the value of your company is essentially your total assets less your total liabilities. It's called book value. There are other ways to do it as well. There's a certain number of multiplier of your EBITDA, earnings before interest, amortization, depreciation, all of that wonderful stuff. Like, for example, some accounting firms are considered to be worth 5 times their EBITDA. So if your EBITDA at the end of the year is $10,000, theoretically, you're worth $50,000. So there's lots of different ways to value them. We just don't happen to do any of that here. We refer them out to brokers for the most part.
Now, let's say you have the client, our successful new small business owner, and they're doing very well. And then later they discover that somehow they missed a couple of quarters of payroll taxes. Would you be the person they would contact who tried to negotiate and handle that for them with the taxing authorities?
Sure, absolutely. It's probably as simple as a payment plan or whatever we needed to do to get that paid off. But what's important here is that you catch the mistake and that you are the proactive individual handling it. You do not want them to come to you. You want to go to them and get that handled. Both the state and federal entities will be so much more flexible with you if you're the one trying to fix the problem rather than trying to chase you down.
And in your experience, or have you had the experience where you've discovered that for a client, perhaps a new client who was using somebody else before, have you discovered that and is that something you're comfortable doing on behalf of the client?
Yes, absolutely. And we discover those kinds of things all the time. unfortunately. So it is what it
That's
is.
That's right. Small business owners.
Absolutely. I mean, one of my big things is tax resolution. And so if you're in tax trouble when you come to me, I'm going to give you your options on what it is that you need to do to fix the problem. If you don't want to pay me to do it, that's fine. I'm more than happy to give you the steps if you want to sit on, hold with the IRS for a couple of hours a day in order to get it figured out. But yeah, absolutely. I don't want my small businesses to be in any kind of tax trouble whatsoever, because that doesn't help me help them grow.
And last question, but perhaps for my clients, most importantly, are you taking new clients? So that if somebody came to my office and I said, you know what, you really need to speak to a CPA, are you currently taking new clients?
We are currently taking new clients. We do have some slots left. We are watching our capacity right now. Clearly, we've got a lot going on. On top of that, we have made the conscious decision to cap the number of clients we have in our firm to make sure that all of our clients get the attention we promise. So we're not about volume, we're about quality. So I do have some left. We'll see if it stays that way by the end of the year. So.
Well, thank you for letting me ask you the question. This is instead of vice versa.
This is different and fun. I really enjoyed it. So thanks. We got 2 videos knocked out in one day, 2 weeks worth of work. This is great.
Absolutely. My pleasure.
All right. Thanks for coming, you guys. We'll see you all next week. Take care.